You're listening to the Sales Tax People podcast.
On today's episode, we're talking about what happens when your sales tax software breaks when no one's watching. $0 returns filings for months, connectors between your e-commerce platform and your sales tax tool just silently disconnecting. And by the time somebody catches it, you're staring down back taxes, penalties, and audit exposure across multiple states. And then we get into what actually works. Why the best approach isn't software or human expertise, it's both. Layering real oversight on top of automation so that when something breaks, when a law changes, when you cross a nexus threshold you didn't even know about, somebody's actually paying attention. Enjoy.
Something came up recently, as you know, almost every time we have a conversation, the three of us, I'd say on a lot of our podcast episodes, one of the Parrisms that has become a sales tax peopleism is around the concept of set and forget it. Right? And there's a couple different ways we say it, but generally it's if you set and forget it, you will probably regret it. Or you will regret it, right? Sometimes it's more of a bold statement of as an absolute, you will regret it at some point if you set it and forget it. I want to talk a little bit today about why that is. Like, what are some of the specific reasons that we encourage people to not set it and forget it? What are some of the specific issues that we see when someone does set it and forget it? And you know what? I'm just going to roll with this first because I just finished recording actually a podcast in the studio with one of our clients that happens to be here in St. George. And I was able to have them here and we had a discussion, and really cool people, like super cool story. That it'll be a release as an episode here soon. And the company is Beautiful Brows and Lashes. They also have the domain lashliftstore.com. And when we started working with them a few years ago, it was absolutely the biggest pain point that they had around set and forget it, right? They had connected a sales tax software to their Shopify store. And I mentioned actually in our conversation we just had today, sometimes it's worse for companies once they start asking questions, once they have an advisor like this company did that was they are a CPA firm and they're super sharp, and they were smart enough to start asking questions around, sales tax and what needs to be done for this company, and then connected them with the sales tax software. And one of the biggest issues that companies face is exactly what this company faced. And there's actually two that I'll pinpoint. One is that there just was not support, right? Meaning they start getting registered in states. They start getting set up with returns in these states, and those begin to be filed. And the problem is that you don't have someone seeing all the details, or even like a high level like dashboard view of some of the most important details. So you don't have the oversight there of, first of all, seeing if things are being done correctly. And you don't have the support there when things are not done correctly, or things break, or there's issues, or there's errors, and they don't have the support around that. And then for this particular company, when the software piece, the technology itself, disconnected, and what happened specifically is the connector to Shopify broke. And so then the data was not flowing from Shopify into the software dashboard. So then when returns were being filed, there wasn't anyone filing the returns that had enough awareness or enough focus on the fact that, you have a company that went from filing and reporting tax to then $0 across the board on all their returns, which was about 13 or so states. And it's like, oh crap, now there's $0 returns. And there was no one like looking at it with, again, enough awareness and enough, you could say, intention to start asking questions of like, hold on, why isn't there any tax? Why isn't there any revenue? So the two, summarizing that, the two big things, they're just not support. There aren't the people there asking questions when things break, or when, things are brought up with the state, or they're not brought up. And then the technology piece, you got to make sure that it is working properly.
Yeah,
no
it's
doubt.
100%. One of the biggest situations you have on set it and forget it is um, errors aren't necessarily exposed month to month, right? If there's no oversight. So to your point, one item is oversight, visibility into what the system is doing, the decisions that it's making. Another issue would be original setup, right? If you're going to set and forget something, you better hope it was set up right in the beginning. So it's one thing for it to be set up right. To your point, you could be collecting tax and not remitting it. You could be collecting tax in a jurisdiction where you're not registered. You could be registered, but not collecting tax when you should be. You could be registered, collecting tax, and still not remitting it based on the reporting and the information that you get out. Really significant without oversight. But I think ultimately, if you did set it up right, you you are registered in the right jurisdictions, you're collecting tax on the right items at the right rate in those jurisdictions based on the system. The other things that can come up is just uh, any change. It's going to be rare that you find someone in the market who hasn't seen something change in the market in the last month, the last quarter, the last year. So if there's no review of your set it arrangement, then nobody's going to go back and make any changes. Then it can become, um, well, for lack of a better term, superseded very quickly, right? Your original setup can become obsolete because you've added new products, so you have new SKUs, which aren't being mapped properly. Maybe you've dropped SKUs. Um, maybe you've entered additional jurisdictions. Maybe your system is set up to track when you're approaching economic nexus in a specific jurisdiction, but you're not aware of it. And so what can happen is any one of these issues can go on and on for months, for years, if there's no oversight and identification of any errors in the current setup, you may be doing something wrong, either over collecting, over remitting, under collecting, under remitting, across the board, and that's going to have implications or ramifications for your customers, for the state, and likely result in penalties and interest or additional
Yeah.
tax out of your pocket. It's worst when you are registered, you're not collecting, but you have a responsibility to collect. That's the worst case scenario. But just like it is being registered, collecting tax, over collecting tax because of the mapping of the tax codes and the taxability that's being applied. Because you're going to have some potentially mad customers. A lot of people used to say, just over collect, just collect 10% on everything, and we're covered. Well, then there started being class action lawsuits by customers for being overtaxed in certain jurisdictions. So the key to sales tax is getting it right. Obviously, that's what's going to control um, or mitigate risks associated with being an agent for the state. And more states can require you to be an agent for them and collect their tax. And so figuring that out takes more than just automation. There's incredible automation tools, but along with it comes proper oversight and expert use of those. My favorite analogy is AI. I mean, you could have AI write you a paper for your class. Don't do that, young ones. Don't do that. But you could, and you could not read it, right? You could set the parameters, tell it what you need, and say, give it to me. Listen, I'm so busy as a young person on social media that I don't even have time to read what AI wrote. I'm just going to turn it in. And when I turn it in, I have no idea what was in it. So if I'm questioned on that, or even worse, if it's outrageous, if AI was hallucinating while it was writing on my subject material, I'm going to get a bad grade. I'm likely going to get a terrible grade, in fact. It's just the oversight. It's just someone being involved in reviewing what's happening, reviewing the settings, reviewing the transactions, reviewing the result, and reviewing the output. It's just you need that expertise on top of any automation that you've put in place.
It's
Yeah, and there's like
interesting.
the two key areas of setup, right? It's the big one that you just described in so many different ways, right? The different variables and aspects of the setup in determining like how you need to be set up with the state, determining how that relates to your setup as a company, and just the overall, like, what does compliance mean for you? And then there's the setup of the software itself and making sure you have the right tax codes assigned to your SKUs or your items. And that's a big one that I see almost daily. I could point to a new conversation or a conversation with, say, like a new prospect that's brought to us where they're, using Avalara. And I did air quotes because they sign a contract. And this isn't a bash on Avalara, right? It's very much tied to set and forget it. And what I'm alluding to is these are companies that very much needed Avalara, and they need the software and they need the automation that Avalara provides. The problem is no one actually ever set up Avalara, right? The technical side. And it's not so much the technical side of the setup, it's more so specific to the sales tax piece. And again, making sure that you have tax codes assigned to your different categories and your different products that will actually generate the correct taxability, right? And the correct tax rates. Because so often I see someone's Avalara account where they haven't even touched that, which means they haven't even pulled in any of their items into the Avalara dashboard. And it's like, what are you paying for, right? It's literally worthless at that point, because all it's going to do is just tax. Well, I shouldn't say it's worthless, because it's then going to default to just taxing it everywhere. And at least at that point, you're getting the, correct tax rates for the most part, right? Based on your customer's address. So, which, highlighting those 2 points of just how the software operates and what it actually is, where it's most valuable is those 2 things. One is the taxability. It's going to determine, based on the way you set up, when it is set up correctly, it's going to either tax it or exempt it or even tax it at a reduced rate. And then when that's set up correctly and you do have products or services that are taxable for your customers, the second piece, of course, is then charging the correct rate.
100%.
It's interesting when you talk about setting up the products and the services, how you want to get that right. I mean, that's super, super crucial and important. One of the recent problems that I've run into with a current client is helping them understand, hey, the tax you collected, or what you call tax collected, actually wasn't tax. It was a processing fee, but how it's put on the invoice is it's marked as a taxes and fees on the invoice. And so what they're doing is, they're in Indiana, for example, instead of charging the flat 7%, they're now charging 9%. And it's just being collected and then it's being remitted. But in this specific instance, they're not even certain that it all got remitted. So when you talk about this whole having people involved, whether it's internal people, external experts and consulting firms, or whatever it may be, a software company, whatever it may be, you got to have people involved that understand what's going into it. To Parr's point, if you're just going to ask AI to write you a letter or a paper and then you're going to turn that in, oh, bless it. But if you get somebody who prompts AI with the proper things, and then they could help correct grammar errors and different things, and there's a lot of value there. But in that particular instance with this client, it's, yeah, the sales tax rate is 7%, but what you're charging is 9%. Yeah, and nobody pays attention to it for the last 2 years, and then they end up over-emitting tax or end up in a heap of a mess.
Yeah, if that company were to be audited, there'd be some trouble there. And that's a great point to bring up, of how often the these sales tax processes and call it like sales tax consulting and doing some research informs the way a company even like sells or invoices, their different products and services, because it can absolutely affect taxability. It can affect, how an auditor would look at it,
Right.
and ultimately affect, both whether or not your customers are overpaying tax, which we never want to do to our customers. Right. And then it can affect, if you're, in some cases, unfortunately, we run into companies that are under collecting.
Right.
And yeah, it would be a mess in an audit, and it would be financially painful.
Yep. It reminds me of a current client. It is a construction contractor. They're a contractor based in Arizona, and as contractors, you're responsible and liable to pay tax certain goods and materials that you use in the construction or in the fulfillment of what you're doing, whether that be building a house or moving dirt or whatever it may be. As a contractor, you have to understand both on the purchase side, is what I'm buying subject to sales tax to me? Do I have to self-assess or emit use tax on it? Do I have to pay sales tax to the vendor that I'm purchasing it from? Or can I purchase it for resale and collect the sales tax from the customer? And at what rate it's due and at what amount it's taxable? I mean, it's just completely different. And when you move over to Texas, for example, where Jason is, it's like now you're dealing with completely different legislation, how contractors are treated, whether they're retailers or consumers. And so regardless of the industry, whether you're in hospitality, you're in a service industry, you're an e-commerce company, you're a contractor, maybe you're a cleaning company, you're in the professional services industry, maybe you're in a consulting space like we are. It's so, so important as you're selling these products and services to understand whether you're responsible to collect tax, whether you're responsible to pay tax, and whether or not you're responsible and liable to collect it and to remit it to the jurisdictions which it's due. So, man,
it's hard to know all that, right?
It really is.
It's even as experts in the field, having been involved for 30 years, we don't know. You can't just name a list of states and issues or laws or whatever, and we're like, yeah, this one, this one, this one, this one. Yeah, you can't know it all, which is why we say that these automation solutions are key, right?
Right.
They're collecting tax in the right place at the right rate. It's brilliant, but there's a setup involved. So you don't have to know, but the setup is important. Sometimes a client will reach out and they need a deep dive on some tax research. Could be a specific issue, whatever the case may be. And then they want that issue across multiple states. And we're like, we could spend $30,000 doing a deep dive research project. The problem is, it would be good for you on the day you receive it.
Yeah. It's super valuable today.
Because
tomorrow.
The laws change, situations change, fact patterns change. And so you spend a lot of money to get the right answer on a Tuesday last week. But the answers actually could be different Tuesday this week. That's a real problem. The automation solutions, the research is baked in. So, and when there are changes, the taxability within those systems change, which is great.
Right.
And the rates are rooftop, right? You can't get more accurate than the rate sitting on top of your rooftop. I'm surprised that they're published on rooftops the way they are, but people are able to get rooftop rates. So on top of your house right now, you have no idea.
Look at those rates up there.
On top of your house right now, there is a rate that's being published. Your rooftop rate. It's incredible.
In some instances, rooftops may have two rates.
Easy now. Careful. That's confusing.
You should check that before you buy your next house.
But the point here is the day you set up your SKUs and your taxability codes, that day it's accurate. But a week from now, a month from now, when you've added more products, more services, when things have changed within the organization,
When Washington decides to change its mind on what's taxable, oh, no, now we're going to tax these services. Oh, you are now. Okay.
That setup that you made, that you said, oh, peace of mind. I'm just going to forget about this. That setup was good on day 1. That setup may not be good on day 412 or day 82. So it just requires some oversight. Now, we say it all the time. There's a motto in relation to Montana. Do you guys know the Montana motto? The
I
last
don't think so.
best place. That's the motto. That was the last
No
state
kidding.
in 50 states that I visited. My son and daughter-in-law took my wife and I on a little tour of the west side of Montana, where he spent quite a bit of time in his younger years. And it was really fun. But what was really cool about it was the last state that I visited, and their motto is the last best place.
Whoa.
Super cool.
No
Now, why do I bring that
coincidences.
up?
That is a great question.
You may ask,
You led me
Parr,
down this path.
why do you bring that up? Do you ask that?
Parr, why do you bring this up, bro? Why?
Listen, we don't want to be your last best opinion. We want to be your first, second opinion. So when it comes to your setup and your situation, just think Montana, think the sales tax people. The last best place, I like that motto for the sales tax people, because once you land here, you're likely to stay here. But also, we want you to be the first. We want to be your first, second opinion.
One of the things about how we operate too, even if you think we're going to be the last best opinion that you get, we don't allow that to happen internally because of the collaboration. I've been thinking multiple times with different during this episode, during this conversation, right, as we've talked about some of these things. Part of what makes the approach with these service-based companies like ours nowadays that are better than ever is it's a fractional approach where you're more integrated than ever with the team, right, or the companies and clients that we're serving in particular. And when you have a team that's been formed over, at this point, 3+ decades with us, it's constant collaboration to where there's constant opinions and ideas and expertise and experience being brought to the table, to where, like, even as something, sometimes seemingly simple conversations that we're having around nexus and taxability with our clients, like, it's a constant with us to say, hey, Paul, I know you're busy, but here's this spreadsheet, right, with information. What are your thoughts on these particular points? And we collaborate and we learn and we grow. And it's a constant, second and third and fourth opinion that's being brought to the table. So it's never a final opinion when it comes to working with a team like ours.
Yeah.
Shameless plug for the sales tax people. There you go.
That's a good call out. It's a good call
And
out.
it's that way because, in my opinion, there's from my perspective, there's multiple ways in which you can view or take a position on a specific item that may be a little bit gray. I mean, it's not always black and white. Landscaping services are subject to tax here. They're not subject to tax here. Sure, that's black and white. When I sell a microphone, it's going to be subject to tax. That's black and white. But when I provide a service, well, is it a data processing service? Is it an information service? Is it a software as a service? Is it a digital subscription? What exactly is it that we're talking about? And so from a business perspective, you can take the position that, hey, what I'm offering meets this definition per our interpretation and how we apply that. Under audit, the state may come in and take a completely different position. And then that's when you go back and forth. And depending on how much back and forth, maybe it goes up to a hearing. Maybe it goes all the way up to the Supreme Court. South Dakota felt like Wayfair established economic nexus. And even though there wasn't a thing, well, I'm going to take you all the way to court. So you pay a lot of money in legal fees to do that. But under audit, you have to understand that a state may take a different position. And so now you're just hedging your bets, right? You're playing what I call audit roulette. You're spinning that wheel. I'm going to put it all on black. And here's my argument. And here's how I'm going to defend that. And so when you collaborate on what the legislation says on the taxability of our product or service that we're providing in the state, all of the key decision makers should be and ought to be aligned on how it's taxed, or what their position is on how it's treated, what definitions it falls under. And so, yes, landscaping services may be subject to tax, but what if you were to tweak that, and instead of providing landscaping services, now you're providing design services for landscape? Well, are we now talking about landscape, or are we talking about consulting and design services? And so truly understanding that, and then collaborating, okay, what's the pros, what's the cons if we take this position over this position? And then how material is it? Well, if we're doing $10 million and we get it wrong, we want to make sure that we get it right. So anyway, there's lots of ways to go about it, but until you have a collaborative decision, you're not going to be able to get the peace of mind, in my opinion. From my perspective, you're not going to be able to get the peace of mind on how to manage it, how to deal with it, how to address it and set it up, and then to keep tracking and monitoring it as you continue.
Yeah, it's a great call out. A quick example, so I don't belabor the example, is New York. New York taxes security services. So if you order a security guard or have other security services, physical security services, then you owe tax on that. It seems like an odd one to tax, but real quick, the IT industry got caught up in this, in the sense that cybersecurity was deemed a security service by New York. And the way that was determined was in the audit of an IT managed services company. It's not like it was published so that you could recognize that or understand that. It was an interpretation from an audit scenario. And so you start to argue back and forth. It goes to court, and ultimately it's just a definition, right? You're providing, what are you doing? You're helping make sure the network is secure. Yes. Okay. Security service. We would like the millions of
Busted.
dollars in uncollected tax out of your pocket with penalty and interest. It's just case law helps, because you run into
Yeah.
cases like that, and that helps you collaborate and understand what the best approach is. One thing that I'll say here on any of this is we always take the conservative approach, right? If it's how should you tax, or what you should do, you should try to follow the law as closely as possible, meaning you should tax it if it could fall within that umbrella, or unless you could specifically identify an exemption that's clear. But if you're in an audit scenario, then you argue as strong as you can for the possible exception or situation. If you're in a situation where you're trying to identify refunds that might be coming back to a company or to a client, then you're going to be strong in your position to try to claim or find those exemptions. But in your responsibility to collect tax on your sales and services, you don't want to take that aggressive audit or refund style approach. You definitely want to try to comply with the law. Gratefully, in most situations, with the improvement of automation solutions and taxability that's built into those solutions, it's better and better and better. You're not having to make some of those decisions, which could be really significant. But when they're big ticket dollar items, you definitely want to spend a little bit of time making sure that you have it right.
100%.
Yeah, there's certain categories, like tax categories, and businesses that fall into those categories, and then all the nuances and differentiating factors of some of these businesses and the way they operate and how they sell and what they sell, that where there's just no getting around it. This complexity, right, and these questions that need to be asked, and ultimately decisions that need to be made that are kind of in that gray area, you could say. And this ties right into what you were saying, Parr, of like the conservative route is often the best one, because one thing that is super clear from case law is that the states are really good at finding ways to say what you do, it lands in a certain category, and so you owe me tax and penalties and interest.
Well, exactly. As Paul always says, state sales tax law does not make sense.
Yeah, sales tax is ruthless.
It doesn't always make sense. It makes dollars. 100%.
I'm not sure that came through.
No, your audio cut out. I thought it was me.
I got a call right when I was saying it.
Right in the punchline, you know?
All right. Sometimes we let those words slip that need to be bleeped out.
It's true.
Watch this episode when we dub out Parr cussing again.
Thanks for hanging out with us on the Sales Tax People podcast. If you want to talk about sales tax, or maybe you have an experience that goes along with something we talked about today, or maybe you just want to hear about how Paul's day is going, make sure you send us an email to podcast@sales.tax, or you can text us at 949-355-5098. See y'all again soon.